How's it going, Forex traders? Welcome back to the inside of my screen. So the first pair we have here is the BTC USD. That's Bitcoin. So on the past couple of weeks, as you may have seen in my last video, I actually came to highlight BTC to the downside. By the way, this is the weekly time frame of things. And let's just go down to the daily time frame and see what actually prompted my going short on BTC over time. So if you look closely, let me just bring this guy down a bit. A second. So if you look closely at this pair called BTC, you may have seen that we actually topped at 130,000, roughly $130,000 a coin. And then not only did we do that, we put in a head and shoulders pattern at a significant level like so. Now whenever the market fails to continue higher after in a series of higher highs and higher lows, I mean, if you look at the left hand side of things, you can see that right from where this trend has started, we got this is a low here, this is a high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. A failure to put in an equal low or a higher low somewhere around here, like so, resulted in this guy, starting to put or bring some, series of downtrend characteristics. All right. So now, right from here, this is the high, as you can see, like so. This was a turning point here. Do I have that app tool? Let me see if I have that app tool. Show you something real quick. Let me show you something. It's one of those tools that I actually used here before. Let me see. Yeah, this app tool. So right from here to this point here, you can see that there was an arc formation there, like so. Okay, so this in itself already tells you that whenever you see this thing happen, for some strange reasons, that the market just fails to continue to print, what it was doing on the left hand side of things here, and then it just starts to print in a different kind of thing, a different kind of scenario, or the opposite of what was happening on the left hand side. Best believe this is about to be a trend reversal at this point. Like so, it will not always be a grand play. You won't be one grand chart pattern all the time. Sometimes it could just be a change in trend. All right, so this is it, like so. So this was the trend, the trend change. So we went from putting a series of high highs and higher lows to beginning to put in lower lows and lower highs, like so. So this was the arc formation. And whenever you see this in a trade or in a trend, best believe that the market is literally about to reverse to the downside. Yeah. So now that out of the way, the second confirmation I had there was this break of this trend, like so. There was a trend line holding BTC upwards, and that got broken right around $78,000 a coin, and then we started to put in a series of lower lows and lower highs. So scaling down to the daily time frame, back on the daily time frame, let's see how things look. This is it. Yeah. So begin to counter waves. So we see that this is a high, this is a low, this is a lower high, this is a lower low, this is a lower high. So it was easy for us to make an entry at this point using what we call the Fibonacci tool. By the way, guys, if you want to learn how to do this, the link to the mentorship program is in the pin comment, so check it out. So from this swing high all the way to swing low, entries were at that 0.5 region, like so. See, it was a simple counter trend line break and entry. So once you had this entry confirmed, so it was just a simple trade, and then that sent BTC all the way back down to $63,000 a coin, which I'm actually watching closely. So for the next action on BTC would be determined by a break of this level, like so, because the market moves from one level to the next key level, and one thing I do not advise people to do is trade around key levels. All right, so we don't do that. So I need to say this market break on the weekly time frame. Okay, so we need to say a clear break and continuation on the weekly time frame towards $35,000 a coin, then we're actually in business, all right, for BTC shorts. But for now, this market is at a very crucial level, and we could even play around this level a bit. So that's why I'm not doing anything extra on BTC for the moment. But the moment we do actually clear out this $63,000 a coin level, we are in business, and I'm shorting this guy all the way to $35,000 a coin first, and then subsequently, if we do continue going lower, then it's all the way to $15,000 a coin for BTC. That's just that for BTC. All right, so let's just talk about gold. So on the other hand, gold has been a very good boy. It's given us significant amount of pips shorting this guy right from this very top, like so. It's been a very very cool It's been a very very cool experience trading gold so far. So again, similar thing to BTC. For some strange reasons, we're putting in series of high highs and high lows right from this point, like so. Okay, now for some strange reasons we got here. So this is a low, this is a high, higher low, higher 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 high, false breakout. All right, so this even went on to become a false breakout, as you can see, like so. So anytime you see the market break above a level and then first to continue higher and then coming to put in a lower high from that previous high, best believe this is going to rotate even lower, as in the case here with the gold. All right, so long story short, scale down to the daily time frame. This was what happened here. So we went from putting a series of high highs and high lows to putting a high equal high here. This was like a double top pattern like so, and then subsequently we broke through the neckline, and then the next level that was formed was a lower high from this previous ones. All right, so that was our first entry on gold. So second was obviously a pullback down there again. So now moving forward on gold, what I actually look at is the left hand side of things. Yeah, I can see that there was a recent supply level at the left hand side of things, so I will not be surprised to see the market pull back into $4,351 dollars announced. If you check on the 4 hour time frame, the trend is a bit more detailed. Yeah, so this is again going from the recent high. So this was a high, low, lower high. Okay, just playing around in the range here, and then we continue. So this was another high, another low, lower high, lower low. So I see a 4 hour time frame supply level somewhere around here, like so. So where I'm actually waiting to go short on gold is at this level, 4,000. All things being equal, if this level does hold, I'm seeing that gold is going to drop all the way back down to $3,900 dollars an ounce, which was our prime target for this guy shorting gold. Shorting gold. So this was a target for shorting gold here. So once again, what I need to see is a pullback towards $4,390 an ounce, and once that gets in, I'm looking to short this guy all the way back down to $3,900 an ounce, and that's just that for gold. So now this trade is only valid if and only if this level holds at 4,344. All right, so that is my level I'm actually watching gold for. So if I do, because this is like a double top here anyway, so if I do see a solid hold, like maybe a 4 hour time frame candle engulfing, I'll be actually be looking to go short on this level, like so. So it's a pretty decent level if you ask me. We had a candlestick reaction there before, so I'll be looking to go short from there again. So entry will be very simple: 4 hour time frame, either a bearish engulfing candle or a normal bounce, or maybe a counter trend entry, whatever thing gold gives us. So whatever thing gold gives us, will be short on this pair in the next couple of weeks. I think next week even. So this should be ready. All right, so that's that for gold. So now onto the indices. I have something going on the indices that I actually want to show you guys real quick. So first things first, S&P has been on a significant bullish trend since the first day I realized S&P. It has never been on a downtrend. All right, so now looking at things, just picking up from where we left last time, I'm seeing that we are beginning to be exhausted. Yeah, this trend has been such a linear trend, and it's starting to be exhausted, and we're starting to put in some pullback here. So all things being equal, for the S&P 500, my prime target remains 7,800 basis points, although I'm not going to be making any entries here. So I need to see like a pullback to roughly 6,000 or 7,000 basis points. Once I see a decent pullback there, then I'm actually going long on S&P 500. Entries will be very simple. We sent to the standard procedure students channel, so I can see a few player like so. So we need to see a pullback deeper into the 0.5 and 0.1 region. Once you see that pullback here, the next thing we need to see is a bounce or a kind of like a wavy pattern that allows us to use the counter trend for an entry. So we're making entries on the 4 hour time frame. So all things being equal, this is what I'm actually looking out for the S&P. That's if and only if this level at 6,901 basis point holds. If it doesn't hold, guys, we have to reevaluate and then make other plans. That's why it is always crucial to have contingency plans for all your trade setups. Yeah, so that's that for S&P. Once that clicks, my target for S&P remains 7,800 basis points, which just came a few points shy of, to be honest. Similarly on Nasdaq also has the exact same kind of scenario. Now, if you want to trade Nasdaq and US 30, I would advise you mirror the S&P 500. Yeah, just look at what the S&P is doing. So again, Nasdaq also has a similar scenario like so. So this is it on Nasdaq. Okay, now another name for Nasdaq is US Tech 100. Okay, US Tech 100. That's another name for Nasdaq. So this is it here. So so looking at the weekly time frame, we still have that bullish setup here. So this was a low, it's a high, higher low, higher high, higher low, higher high, higher low, higher high here. So for us to move further on the S&P 500, on Nasdaq rather, I'm looking to see a decent pullback to 26,000 basis points. Once I see that completed, I'm actually going long on this pair. All right. So now for targets on Nasdaq, what I would advise you do is just measure this guy from the head to here. Okay, measure the length from there to there, keep it straight, then bring it all the way here. That is your target for Nasdaq. I won't explain what I just did there, but if you want to understand that, check out the link in the pin comment. It brings you such a membership program like so. But all things equal, Nasdaq should be hitting 36,000 basis points, okay, next couple of weeks. So what we simply need to see is a pullback into that key level at 26,000 like so. Once it pulls back here, we're actually good to go. So it's going to be a Fibonacci play, all right? So right from swing low to swing high, pull back into that place. Of course, first tip will be where the market reversion, but subsequently we see Nasdaq rally all the way to 36,000 basis point like so. And I believe I have covered every single significant pair that has what it takes to pay us, apart from NZD USD. On the other hand, this is not a high quality setup, so I'm not going to talk about it. But S&P 500, BTC, gold, Nasdaq all have what it takes to pay us at the moment. Nothing much on the dollar index. We are still pretty much in a range, so I'm not going to say much about that. But just keep an eye on BTC, keep an eye on gold, keep an eye on S&P 500, keep an eye on Nasdaq, and keep an eye on YouTube channel Desmond Samuel. Once again, guys, leave a like, okay, and let me know what you think in the comments about this video. If you got any challenges with your trading, let me know how I can actually help you. YouTube sends me all the emails. I see all your comments. Let me know what you think about this video, and subscribe to the channel. Help us hit 3,000 subscribers in no time. All right, I'll catch you guys next time. For now, trade safe and apply proper risk management, and peace out.